Welcome to the VectorVest special presentation, this week titled A Process for Success. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be your presenter this evening. Perhaps you've heard the maxim, your process determines your success. This is certainly true when it comes to trading the markets. When that process includes VectorVest guidance and our tools, it's a combination that's hard to beat. VectorVest has always supported a systematic approach to investing. Your investing objectives, coupled with your investor temperament, will help define your process. Trading plans are an expression of your process. Any trading plan is built to answer three basic questions: when to buy, what to buy, and when to sell. How you answer those questions is a reflection of your investor temperament, your particular balancing of risk and reward. Generally, we identify temperaments as conservative, prudent, aggressive, or speculative. The VectorVest mantra is to buy safe, undervalued stocks that are rising in price in a rising market, a very prudent to conservative approach to buying stocks, and that's worked well for over 30 years. This approach was demonstrated beautifully by Glen Tompkins in his special presentation from 2 weeks ago, where he demonstrated a prudent trading system that bought top VST stocks on the DEW timing signal and closed the trades when the stock's RT fell below 1. He demonstrated how the VectorVest analysis and tools make the process simple to implement, yet remain effective. Of course, over time, our objectives and our skills will change and we'll want to grow as investors. I'm sure you know, because you're watching this presentation, that VectorVest is committed to helping our subscribers do just that. We work very hard to provide world-class education resources. Perhaps you've noticed. But please don't miss just how valuable is the work product we produce every day. Case in point, let's take Glen's demonstration of 2 weeks ago. And let me move into the program. From the home page, I'll go into a market timing graph. Here's our market timing graph. It's set up in a standard configuration, looking at a 1-year time frame. I've added DEW timing signals to the graph and highlighted the up signal from April 6th, which was the setup for his demonstration. Glen demonstrated a trading system that bought top VST stocks on that DEW signal off of the low of March 23rd. Well, what was going on the market around that April 6th time frame? Well, the market had been in an oversold or bottoming condition as the MTI and the buy-sell ratio had both gone well below their thresholds, indicating a bottoming market condition. We had prepared you for this market condition in our Friday essay in the VectorVest Views. So let's go to the VectorVest Views. I'll open the Views Manager toolbar and let's go to our essay viewer. And in date order, let's roll back to that time frame. And we'll start with March 20th, before the low, and the essay that week was titled Be Patient. Let's double click it and we can scroll down to the essay. So let's jump to the salient points. I'll scroll down and we'll pick it up with this sell-off has created extremely attractive buying opportunities. Thursday's trading suggested to me that investors are itching to pick up bargains. When I look at Thursday's intraday market timing graph, I see that the price of the VectorVest composite moved lower at the open, reversed course around 9:46 a.m. and started moving higher. Throughout the day, the VectorVest composite remained relatively volatile, but you can see a pattern of higher lows and higher highs before finally ending with an overall gain, but off the high for the day. Thursday's one-day Derby winners were all bottom fishing searches and up significantly. The top search bottoms up was up over 50%. Moreover, the top 5 one-day winners were up an average of 38.62%. But alas, although the market opened in positive territory Friday, it didn't close higher. California, New York, and New Jersey ordered all non-essential businesses to shut down. Fear returned and the price of the VectorVest composite ended another day sharply lower. If you're a day trader using the Derby, you cleaned up Thursday. But what about everyone else? Honestly, it's too early by VectorVest measure to tell if any rally is sustainable. One day does not make a trend. We'll need to see the price of the VectorVest composite move higher week over week to give us a preliminary signal of an uptrend. When the primary wave turns up, we'll want to see follow-through with an explosive up move. If you're prudent, wait for a green light in the price column of the color guard. And so we're getting strategic and tactical guidance in the VectorVest views. And we finish up with, we do not want to forecast or get ahead of ourselves. We will let the VectorVest system do what it was designed to do. Remember, the VectorVest indicators give us early warning signals to protect profits and play the downside in January. They will also tell us when it's time to buy. Until then, be patient. And of course, we saw the market put in its low that next week, and the next week's essay was titled Bottom Fishing with the VectorVest Real-Time Derby. Sounds pretty appropriate. Let's double-click on it and take a look at the essay. Let's pick it up mid-paragraph. As with all the other measures mentioned in last week's essay, it didn't seem to make any difference for stock market performance Monday. Or did it? While the market was taking another beating Monday, something was different. I was watching the price of the VectorVest composite move lower Monday, but the RT on the VectorVest composite moved higher. A bullish divergence. That's interesting. Another interesting tidbit was that 4 of the 5 one-day derby winners were bullish, bottom fishing searches. Tuesday, the markets opened higher and continued to rise throughout the day, and all 5 of the one-day derby winners were bottom fishing searches, but the primary wave hadn't yet turned up. Wednesday, Wall Street put together its second consecutive up day for the first time since February 19th high. The primary wave turned to up, and we had our first indication that we may have seen the bottom. The top 5 one-day derby winners listed in the daily color guard report were, you guessed it, bottom fishing searches. The Derby reveals the trading habits of aggressive investors and traders. Both the one-day and 5-day Derby winners Monday through Wednesday were telling. They showed that aggressive investors were bottom fishing, mainly for small-cap stocks. With the primary wave up on Wednesday, aggressive investors and traders were looking for follow-through in Thursday's session. Well, they got it. When the market closed higher for the 3rd day in a row, it exploded higher at the open Thursday, despite a report that 3.28 million jobs had been lost in the week prior. I was itching to pick up some bargains too, and I knew the best place to find them would be in the VectorVest Real-Time Derby. So my point is, there's a lot to learn even if you don't own the Derby tool, and the reason why you should become a student of the VectorVest views. You would recognize the market is coming off an oversold condition, and this is a bottom fishing opportunity. Allow me to demonstrate, and I'll use Glen's setup. Glen began his case study on the DEW up signal on April 6th. So let's go to the views, and let's change our date to April 6th. So this is the daily views, which doesn't include an essay. It's only the timing and strategy sections. And if we scroll down, we'll come down to the strategy guidance. And we see the top Derby winners on both the 1 and a 5-day basis on the 6th of April. So this is what you would have seen after the market closed, and notice all of the winners were bullish on both the 1 and the 5-day basis, and notice they're all bottom fishing searches. In addition to that, 3 of the top 5 one-day winners have been performing over the past week. Silver Singles, VST Mighty Mites, S&P 500 RT. We call those easy rider candidates. Which search should you choose? Well, we suggest you run the search and understand what kinds of stocks it finds. Are they stocks that fit your temperament? As Glen demonstrated, once you've identified the search you want to use, run the search and add the top stocks to a quick folio. Monitor their performance at the open of the next market session and look for follow-through of both the market and the best performing stocks. So which choice was best? Well, here's the mind-blowing part. It really doesn't matter which one you chose. Here are the quick folios. Go to the Portfolios tab, My Portfolios. I put the top 10 stocks from each search run on April 6th into a quick folio, and these are the results. Jailbreak No Contras run to current is up 89.81%. Pirates Long up 65.77%. Russell 2000 RT up 113.54%. S&P 400 Midcap RT up 69.22%. S&P 500 RT up 43.87%. Silver Singles up 116.79%, and VST Mighty Mites up 123.05%. Why did these work so well? While top VST stocks are universally good stocks to trade, different market periods favored different kinds of stocks. It's called market rotation. Because we were coming off a market correction, money is rotating from risk-off, defensive stocks to risk-on, offensive stocks. The guidance in the views alerts you to the market condition. The VectorVest tools are showing you what's working now. By the way, the top VST stocks, the top 10 stocks from the 6th in the stock viewer, were up as a basket 9.06%. A much more prudent approach. Are you disappointed by a 9% return in less than 6 months? You might have also noticed that the portfolio had been up as much as 21.67% at its high before it pulled back because we just bought and held the stocks to current. This performance was similar in all the other portfolio tests too. Again, starting from the top, Pirates Long, Russell 2000 RT, S&P 400 Midcap, they all peaked with the market on June 8th, then pulled back and moved down to sideways as these stocks finished their blast-off phase. Some of them pulled back more strongly than others. I built this table to make the numbers easier to follow, measuring their peak gain, by the way, as the MTI indicated overbought conditions, market topping conditions, and their final gain. But I'd like to drill deeper in my analysis, so I loaded these tests into the back tester for some additional analysis. Here are the portfolios again with their performance metrics. Much more detailed information here in the back tester. Same date range. We bought a basket of stocks on the market close of the 6th and held them through the close of the market last night. And I'd like you to notice that all of the searches had at least 80% winners, 8 out of 10 winning stock trades. We already looked at their overall gain. Here is their max drawdown. So the max drawdown is the biggest pullback in the equity curve of the portfolio. The equity curve is showing us that pullback graphically. It also shows how the portfolio performed by holding the stocks past the DEW down signal. So let me just toggle through them quickly so you can see their equity curves. Here's Pirates Long, Russell 2000 divided by RT, S&P 400 Midcap divided by RT, S&P 500 divided by RT, Silver Singles, and VST Mighty Mites. The obvious question to me is, well, how could I lock in those gains and minimize how much of those gains I gave back? Well, the first thing I might consider is moving to cash on the DEW down signal. So let's scroll back up to jailbreak and let's update these tests by going to cash. So I'll strike a copy. Let's change the name from base to cash. And I'll edit the trading system rules to on the down signal, instead of taking no action, we'll go to cash. We'll finish and we'll rerun the test. And let me expand our equity curve and review the results. We improved our winners from 9 out of 10 to 10 out of 10. We improved our overall gain, so there must have been a stock eliminated that had lost money in that flat period. Our gain increased from 89% to 112%. Our max down was improved from 43% to 38%, which is indicating that drawdown off of the June 8th high was still pretty dramatic. Now I'll pause the recording and update our other back tests so we can see if those results are universal. So here are the results. I've grouped them by the search name, and we see universally the overall gain improved, although some of the drawdowns stayed the same or relatively flat. But universally, an improvement in the performance of the portfolio. What if we use stop losses to capture gains and control those losses? We had some trades with really big gains. Will taking the gains and replenishing the portfolio with stocks from the same search help? Glen demonstrated how the Profit Locker Pro system helps manage trades. That's my go-to as well. So let's use the Profit Locker Pro stop loss system to manage these trades. And I'll update our tests with the best performing combination. So here are our results, and what I'd have you notice is that we significantly diminished our percentage winners from the first base runs, but we substantially improved our overall gain by capturing those gains and replenishing those positions with new, fresh positions from the same search. And it dramatically lowered our max drawdown. And you can see that's universally true for each of our test subjects. And what I would also have you notice is even with our weakest gainer, S&P 500 RT, which is only up 116% with an 18% drawdown, if I look at the equity curve, I want you to notice not only did we not draw down after the market peak on June 8th, we actually went to a higher high here on August 10th. Now, the purpose of these tests is not to demonstrate what you could have or should have done, or even what's necessarily going to happen again in the future. No, the purpose of the test was to demonstrate that trading plans are an expression of your process. When you include VectorVest guidance in that process, great things can happen. And VectorVest is committed to helping our subscribers do just that. Thanks for watching.
Yeah.